Right now, I'm sorry.
Okay, guys. Welcome to the midweek. No, this is actually the weekly outlook, and for the 4th of May, 2026. This is gonna be the first one we've done since I've been in Thailand. So if this don't go smoothly today, I'll or we have some issues, this will be a learning lesson. So um, just take a look at the risk disclaimer real quick. And I'm gonna take a sip of this matcha. Right now it's 6 a.m. over here, and we are kind of already. This is me getting my day started going ahead, so I'm gonna go ahead and switch screens real quick. Let's go over here. This week we got news coming up on mainly Tuesday. Gonna be our first day. We need to take a look at. We got Friday, red for older days. On Tuesday, we have ISM services and Jolt's job number. New home sales is going to be an orange folder, but we're also going to be getting the February data. So that's going to be something that we probably want to take a look at because we're not only going to be getting the new data, we're going to get the February data that didn't get released because of the government shutdown. So we need to kind of watch what's going on with that. Then on Wednesday, we got ADP farm roll numbers. They're expecting 90K from that. And then we got unemployment claims on Thursday. They've changed this to an orange folder and this to an orange folder, but this is red folder news. So don't let Forex Factor throw you off on this. We do need to pay attention to this 8:30 release on and 8:15 release on Wednesday and the 8:30 release on Thursday. So make sure you pay attention to that. Also, pay attention to the 10:30 oil inventory. They got this at yellow folder. So again, don't let this fool you. This is red folder activity. So don't let that slide by without taking a note of that. And then we have Friday, the NFP for our payroll and unemployment rate. And we have consumer sentiment and inflation expectations. And then later on in the evening, we have one of the Fed chairs speaking. So I would pay attention to that, but the market will be closed at that time. And then, this is with this being our first week, we got to pay attention to what happens on Friday, but we'll probably have some chop going into the week. So let's go ahead and look at the. Hang on. Let's check the news real quick, see what we got going on. Stocks, stock futures are a little change as investors on their latest US. So yeah, as of late, they have been kind of going back and forth with where they stand on the ceasefire. So as of now, the ceasefire is still in place. So we kind of can kind of roll with it as it is right now. But any given time of day, we could probably have news on the ceasefire deal. So that's gonna probably be our main driver outside of the the red folder news. So I would be listening out for that. And I know, mentioned before that we probably want to go ahead and open up Truth Social accounts because, that's exactly where the news is coming from. Tell me if you can see my screen okay when I switch to this screen. Can you see this okay?
Yeah,
Okay. You see
bar charting.
both charts, bar
Yeah, both.
chart and the
Mm-hmm.
Fed's rate.
Yeah, yeah.
Okay, cool. All right. So, um, this is gonna be. I have an account. It's. I know you probably don't want to do this, and maybe you do, maybe you don't. But I keep his account open so that way I can monitor what he's been saying um on all the news. Like right now, he's talking about something regarding Giuliani. So that's something. Um, Nothing regarding war. Nothing. Search and rescue stuff. So yeah, I typically just keep this open just in case I need to get into see what he's saying. So I would recommend you guys kind of do the same, where you keep his charts open or keep his page open and follow the news. The other one was this one Wale recommended, um, Fast Stock News, and they go by the Twitter. This is a Twitter page, FSMN. Um, this one keeps up pretty good news as well. And but their overall news is their more overall news, whereas Trump is just basically whatever he announces. So, and they also kind of follow his page as well. And then every time he posts something, they're pretty quick at following up to post it on his page as well. So I would keep these two kind of around some, open or around at some point. And then the other one that I like is Earning Whisper. That's where I always get the latest earnings, and which we can take a look at right now. So this week, going into Monday, we have some common names, but the biggest one on Monday that we might want to take a look at is Berkshire Hathaway. That though that's Warren Buffett's. We got a couple other Palantirs, another one you want to pay attention to, and then going into Tuesday, AMD. There's Pfizer. That's I think we're just talking about that. Pfizer and Pfizer. Um, we got Shopify, that's another one. PayPal, Supermicro Computer, got the meme stock at this point, AMC, Marathon. We may actually we'll check out the charts on Marathon um, and Supermicro Computer. They may give us some good options set up. So I'll take a look at those um, when we get on the charts. Then we have Disney. It's going to be another one. We got Uber coming up. CVS, Fastly. There's a couple other ones we've traded to, um, traded options on. Um, Affirm, McDonald's, Sound. That's another one we traded options on coming up on Thursday. So we got some common names, but no big names that will likely move the market. The one thing we may want to kind of take a look out for is the AI sector. Um, and that's because we got AMD and Supermicro Computer. So that may do something on Tuesday. Um, Even though it's not Nvidia, they may give us a bounce if they do a big beat or and they hit on guidance revenue and earnings per share. So maybe that may be something to consider. But overall, we got a pretty decent week on the earnings side. Um, Not huge companies, but just ones we should pay attention to. So, and on that note, let's go ahead and take a look at the charts. And got it. One other thing, let's look at let's look at bar chart real quick. See, so since I've been gone, institutions 45,000 net positive. They reduced. down to 18,000, and then they reduced again down to 8,951, all near these highs. So they added on, and it looks like they're steady, likely taking profits up here. They've added on size near these highs, but they reduced them as they took out the highs. So that's probably what that is a little bit. You can see in contrast the larger hedge funds, they went from 115K, 115K to 110 to 101K negative. So they're slightly reducing size near these highs, but it looks like that they're probably coming out of all of their shorts. As they got over here, I think they came out of their shorts. They were trying to short this move up, and they got off sides. And I think that they were just trying to reduce their short position and flip it. So that's kind of why we got these big moves up. It's like once we put in these lows, they were on the wrong side, and that kind of they were in shorts from this move down. And I think that once we were in those shorts as we were moving down, they were on the short side, and then they got flipped. And as they got flipped, that's why this move was so big, because they were really, really heavy shorts. And then once they started to flip, they had to close out those positions, which made the market buy even harder than it would it than it normally would expect it to have been on this kind of move. So that's kind of why we got such a big move up. And then on the Fed rates, we do have the new Fed chair coming in soon. He's actually being um, reviewed for whether or not they're going to approve it, which he's pretty much already been approved. But unless somebody votes him out, or unless the majority votes him out, then he's going to go ahead and go through with it. So right now, though, the Fed rate is still averaging 92% right now. So not likely, not likely going to change. But with us having a new Fed chair, there is a chance that he could come in and change the rate. One thing about this particular Fed chair is, and I think I posted it on IG, he has a large crypto holding, and a lot of people are kind of leaning towards the idea that he may be uh, a person to reduce the rate at this point, and that he may do things in favor of cryptocurrency. So keep an eye out on that as things go on, and we'll just kind of monitor how he handles everything. So, all right, let's get to the charts. We'll start with dollar. So, dollar last week we gapped open, and this on the chart gap, and it came right back down to this smaller gap, and then we pushed down through this fair value gap up into this new week opening gap, and then we sold off the rest of the week from there. So we're opening up near the lows. We've already kind of started this downside move, even though we're holding it pretty much near the midpoint of this daily fair value gap. So we got a small gap on the open, and I'll leave it to you guys to update that on your charts, but I'm going to leave it for here because we're still following this downside move and holding pretty much right back where we open. But there is a previous day high um, that I'm looking for us to initially take out, which is right up under the yearly. As we push down, we're going to be pushing it to a 1 hour fair value gap. I don't have it on the charts, but I do have it being considered on this 0 to 1 move to the downside. If we push back up, we fail the monthly. and now the weekly, and then we get back underneath this daily fair value gap midpoint, and we could be coming to aim at this previous week low inside of this new week opening gap from last week or week before, a couple weeks before. And we look to take out these previous week lows if we start to go lower. And that would give us our 2-3, our 4-5 would take us below these lows. And then just below this, we got a couple previous week lows as well. That could be targets as well. If we could get a bounce, I'm looking at the one being the primary bounce, which this is already showing signs right now because we gap down and we're holding this. That's giving us a sign that this one, the 1-2 move could be the move, a new move up if we're gonna push up. But if we go ahead and fail the yearly again, which is the most probable area we fail, or the monthly, we go ahead and set up for the 2-3 move to go lower into this area. So I'll keep an eye on that. And then, of course, the three would be the next area, which the three could sweep this low, and we could see the 3-4 move give us a bounce. If we start pushing higher, there's an order block on the 1 hour, and then just along the order block, we have the daily fair value gap high at 98, 430, 434 that we could be looking at. And then we also have this swing high right here that we could be looking at it coming to. We have that the 0-1 move that could likely take us at or above this order block. And then the 1-2 retracement will likely lead us back into using the order block as a new area of support. And then the 2-3 leads us into this weekly new week opening gap that we've already traded into. So we could see it go back into it. I didn't want to, I wanted to keep the charts a little clean up around this area. So this 2-3 move traces back into this new week opening gap. There's an order block right here as well. Let me add that to the chart. We could be seeing price come back into. There's an order block and a fair value gap actually. And you'll see we have this, we have the gap, the week opening gap. Let me extend that out just a little bit. So we have our new week opening gap that we traded into, and we could be rejecting again. And then we have an order block that's in between. So we could see price at the 2-3 reject somewhere around the new week opening gap, low, middle, or high at some point. And then once we get inside of that, the 3-4 move could hold inside in that area somewhere. And that's where I'm thinking we get our sell off from either the 1 or the 3, where the 3 is the highest probability. And if that doesn't start the new move down, then the 4-5 move holds and we push up inside, looking to take out these previous week highs, previous day highs. That makes sense? Everybody
Yep.
tracking?
Yep.
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 Cool, cool, cool. And let me drop it. Drop dollar. Okay, let's go gold. So gold's been pushing down for the past week. We taken out previous week low here, here, and we took out swing lows over here, previous day lows over here. And then we ended up trading just near this new week opening gap from the 29th, Sunday, or actually the 30th, Monday the 30th. So we took out all of this liquidity to the downside, which means that we could be seeing a new move at some point to push us back up if we want to get a move to the upsides now that we've swung and taken out all this liquidity. If we see dollar push push down, we should see gold push up. So we'll kind of need to monitor that. Right now we're under the this is the quarterly. We're down for the quarter. So that's what this level represents, the quarter opening. So if we were to see a bounce, this would not be a bad idea to see a bounce from. Um, we've already shown some signs that we could be pushing up. We pushed up pretty hard on Friday, and we left this daily low at 4570.3. And we took out this previous day high over here on from Thursday at 46.59, but we end up trading back inside the daily range. So I would definitely keep an eye on that. We held this order block right here when we made this low and pushed up off of that. So we kind of got a nice little range between the previous day's high, and we took out this little swing low right here. So we opened up pretty flat for the most part. We did push up, but we're still kind of right around the opening. Um, and right as of now, we're inside of Friday's candle, kind of holding as it stands. So if we do see the move to the downside, we could likely expect for us to take out this low on maybe the 0 to 1, or we get a retracement around this low on the 1-2 move to the upside. And then the 2-3 takes us below this low and these lows that we set over here in the previous week low. So doing the 2-3 move takes us below this low and into this new week opening fair value gap. I mean, new week opening gap. And we could see a bounce from the 1 or the 3, where 3 is the highest probability to take us back to the upside from here. If we get the bounce to the upside from here, but we fail, the 4 likely fails at this order block, and there's actually a little fair value gap, and at that point this fair value gap would be inverted, so that would likely give us our move for the 4 or 5 to the downside. That would trade us into this new week opening gap and maybe through where this previous week low would be the target. If we can get back on the upside, first area is taking out this high from the previous day, and then the 0 1 takes us at or around this quarter opening price at 46.97, pretty much right around 4,700. Um, and then there's a new week opening gap that we traded and opened up the on Friday, April 10th. We've already traded through it over here. We could be coming up to use that again. So we could see the 1 or the 3 be made inside of this new week opening gap. And you'll also notice that if we do get that 2-3 move, we take out this 1, we trade above this 46.97 point, and then we trade back into this new week opening gap. And if we get the 3, we likely taking out the highs at these previous day highs and the previous week high that we have right here. So that's where we could likely see our sell off, is once we get inside of this new week opening gap. It could happen at the 1 or the 3. So we could get a move down at either one of these. And then if we get the move down at the 1 or the 3, then we could see either a new sales start or we could see a continuation. So I'm looking at the 4 being our continuation, where we could get it at around this 46.97 mark, or right around the 47.11 mark. And then the 4-5 move takes us above this previous week high. If we haven't, this previous day, this area of liquidity right here, and then the previous day high here at 47.90. And this is gold. This is gold. Now let's go to VIX. VIX was flat on really stalling on Friday um to close out Friday the week. So but this is after we got a pretty big sell off. We gapped open last week and then we filled the gap, traded back into the gap. The weekly opening price is here. We set the high here and then we sold off again. We took out this low, traded back into the gap again, and then we sold off for the rest of the week. Friday, we stalled out. We pretty much traded near the low of Thursday, and we kind of held right around this area. We took out this previous week low here and one from before below, and then we pretty much traded out of the gap that we made on the week prior. The gap we made on the week prior was here, this huge gap. We sold off right around the midpoint of the gap, and then we ended up settling on Friday where we set the low right around 1644 area, and then we set the high on Friday right around the 1740 area, and then we ended up closing out on Friday right around 1701 area. So, with that being said, we are sitting in a low. If we continue to the downside, we know there's a little short term low here that we could be looking at. And there's a little short term high. So, that's our little dealing range to start, and how we respond to that will kind of give us an idea of what we want to do with the VIX, right? And if we pushing up to the upside, we'll go ahead and take out that high. This high will be our next target. And then we trade back into the gap from the week before, the gap low being 1748. We push up into that gap and we likely get our 0-1 move to stall at or around this quarter point level, which is roughly around 18. And if we do, we likely get a reaction that'll set us up for the 1-2 retracement. If we get the 1-2 retracement, um, there's any point on this VIX level, I see us getting a retracement or a move to the downside at the 1, 3, and the 5. But I couldn't really get a good feel on where we could probably get a rejection from. So I just left it at the 5. So the probability on each one of these are pretty even. Um, where the 1 could reject us to the downside, the 3 or the 5. So um, I would just look at those levels more so as equally weighted as far as how or if we get a rejection, because the VIX has been kind of pushing up or hard, pushing down or pushing up pretty hard the past couple weeks, and it's done the whole move in some cases on just on the opening gap or with one gap up or one gap down. So that's kind of why I gave that no probability on the upside, because we could push up, do the whole move, and then drop right back near it. And that's kind of what has happened over the past couple of weeks. So our 1-2 retracement could happen again right around this 18. And then our three likely around the new day opening gap midpoint at right around 1853. This is kind of where I would see us maybe rejecting from. So I'll move this to 3. And I say that now that I'm looking at the chart because there's this order block right here. So let's just say the 3 is the highest probability that we get our rejection from if we push up. But if we do, we could be holding around this 18, around 18, and that 3-4 move could give us our 4-5 swing if it holds around there and we look to take out the previous week high, and then we go into this 1958 price point from that gap. The downside has our swing low here and then our previous week low. If we can sell off, we go ahead and sell off to take out that 0-1 move. On the 0-1 move, we can, once we take out the once we take out the previous week low, we could see the 1-2 move bounce here, but I'm thinking that we fail if we get back inside of this range and use that to take us below the liquidity that we had on these previous week lows, and we likely get our bounce at the 3 after we take out these previous week lows here. Our 3-4 bounce is a high probability area. And then if we do get into it, we should have a fair value gap here or order block. And our 4 is going to push up from there, or we reject. And if we reject, we take out the lows that we recently made. And I'm thinking that we could come all the way down to the yearly opening price, which is right at 1485. So with us being so close to the yearly opening, there's a high probability that we could be going down to go ahead and grab that yearly opening price. So does that make sense?
Yeah.
That makes sense, right?
Mm-hmm.
Okay, here's the VIX. And now we can go ahead and get into the indices. Let's go ahead and start with Dow. Dow has not made its has not taken out his all-time high that was made in February. So that kind of leads us to believe that we probably will be doing that possibly sometime this week. When we get to the charts for NAS and S&P, you'll notice that we already taken them out on those two. So this one's probably just lagging. So we had a fair value gap that was made on the daily the week before, and we responded to that. We took out this previous week low. We end up trading down into right to make the weekly low from last week, right at or around the there's an order block right here. We set that low from last week right around here, and then we traded up, created a new order fair value gap set up. There's a 1 hour fair value gap right here. There's a new daily fair value gap here, and then we traded into this daily fair value gap to the downside and failed it, right? So that's kind of where we stalled out just below the week before, and we tapped it on the previous week, on last week to make our high from last week. So this previous week high is right on the inside of that that bearish fair value gap to the downside, right around 5125. So, and then our monthly opening price is sitting right near our high. We have an order block on that 1 hour. So if we do get our push up to the upside, you can see there's an order block here, there's an order block here, and then there's a fair value gap. So we could see our 0-1 move push up into the order block and we'll have to kind of monitor to see if it wants to sell off from there. If we don't, we hold on when we get our 1-2 retracement, we hold around this area, and that we could likely use either this order block, this fair value gap, or this order block to take us higher on our 2-3 move. Our 2-3 is going to take out these previous week highs that are right here inside of this gap. And then we see our 3 push up and through this bearish fair value gap. And if we do so, we could see the push back to the downside for a 3-4 retracement. And if we get the 3-4 retracement, that could be a new move to the downside, or we hold inside the areas that we just traded through, which is this order block and those same levels, and we can get our 4 or 5 move to the upside, which takes out completely takes out this fair value gap, takes out the previous day high, and then we start looking at the all-time high. If we start to sell off, which we still are in that area, we see price push back down into this daily fair value gap. And that daily fair value gap could give us a bounce at the 1, where we could see price kind of briefly shift outside of it, but then hold for the most part to go higher from inside. If we get below it, and preferably below this wick on that move, um, let's make that, bring that down just a little bit. Preferably at or below this the wick right here on this swing. Let's go ahead and add that. If we get at or below this wick, we could also see price react. And on our 1-2 retracement, this will be a good area for price to either push up or we fail around this area, because at that point we would have inverted this daily fair value gap. That 2-3 move takes out this low, and then we trade into this daily fair value gap, which we've already used once. So this could just be a 2-3 move to hold inside of this area, which you can see there's a daily fair value gap, and there's a 1 hour fair value gap, and there's a 4 hour fair value gap around this same area. So this 3-4 move is the highest probability because we have liquidity, we sweep liquidity, trade into this order fair value gap, and then bounce from there. So this could be our highest probability move back to the upside. But if we don't, we fail. And you can see the 3-4 move could push us back into this area or just around this gap, this little, not gap, but this swing low. And then that could give us our 4 or 5 move to the downside from there. And we could look to take out this low, the previous week low, these previous days low, and then end up back around the yearly opening price, which is 48,360 on Dow. Let me drop that chart. So that was Dow, and then let's look at Nasdaq. So Nasdaq is making fresh all-time highs. We ended up moving the week before. We set a low inside of the week before is when we took out the October 30th all-time high. We we set open a new weekly opening gap. We moved up from the gap, set a new high, pushed back down into this order block, set a fair value gap on a daily fair value gap, and we use that daily fair value gap to again make a new high here, traded back into it again on Thursday, pushed up, made a new high, stalled at the highs, and then we set a new high on Friday. And then that's kind of where we closed up, right? And you can see we already actually tapped that high once over here on when we open up just now. There is a new fair value, new opening gap. So we'll go ahead and account for that. But we're still sitting pretty much inside of that right now. There was a gap on Dow too. I'll let you guys get that on your own. So we did gap open, but not huge gap. We've already pushed up to take out this high, and now we're still just sitting right near the opening inside of this new week opening gap. So if we get the move to the downside, uh, we would be taking out this low. There is a fair value gap on the 1 hour. That then we do have the monthly opening price here, so we could see price sweep this low and trade up from there. So we could get this 0 1 move to push down and then push up on the 1 2 retracement. So we could see that happen. Um, and if we don't, the 1 2 fails inside of this fair value gap, and we get our 2 3 set up to take out the low we made and this low the previous day, which is sitting inside of this fair value gap. But I think that because we have this huge order block that's overlapping these daily fair value gaps, I think we have a high probability to hold in these areas. We'll need some pretty big news to take out this order block and these fair value gaps. So that's three different bullish points of interest. It's going to be hard to take this out unless there's like some really, really, really important news to come out or something dramatic that comes out. So, news that I would expect to take this out is if we get some bad news on how Iran and U.S. is doing with the ceasefire talks. So that would be something. But if we don't get anything like that, you can probably expect for those three different bullish points of interest to hold. So okay. So, but if we do get the 2 3 to the downside, worst case scenario, we come inside of um, this daily fair value gap that we've already traded from, and our 3 4 bounce happens here. If we do try to sell off, it's after we've traded through through this fair value gap and back into it after it's converted, and then our 4 5s tries to take out this range one more time, and we could see the 3 get taken out, but overall, looks like we might hold in there. So our 4 5 move could come down back into this fair value gap and take out this previous day lows here and week lows here. But again, even after we take these, even if we were to take these two out, there's a new week opening gap that's just below it that could still hold us up. So there's a lot of bullish price gaps and imbalances below us that could hold us up. If we go ahead and continue higher, we would have gapped up, taken the high out, which we've already done, held inside of the gap maybe, and then our 0 1 move ends up being roughly just above the new all-time high, to set a new all-time high. And because we're inside of new price points, right? We'll look at the quarter point. So this one price point happens around 28,050 to 100 area. So this 28,100 area is right around here. So we get our 0 1 move at around the 28,050 to 28,100 area. We get a retracement if it takes us back down near the weekly opening price on the 1 2, and inside of this range area. We use that area to give us a 2 3 bounce from here. We take out this one, and then we go to the next quarter point, which is right around 28 200 area to right around 28 250 area, um, which we would get our 3 from. Then we could likely see a rejection there on the 3-4. The 3-4 takes us back near the high we made here and possibly inside of this range. And if we can't continue to sell off, we hold at around those areas, or 4-5 move to the upside, or 4-5 move takes us right around 2850 to 28,400 area. That makes sense?
Yeah.
Okay.
Mhm.
Also, the other options, if you don't want to use the quarter points, I throw the fibs on. Throw the fibs on. You get similar price points as well. I won't do it now, but you'd get similar price points. So let's say we throw the fibs. The last move, let's go with him. This move right here.
Mm.
Let's flip this.
I have this with fib.
Mhm.
I have this with fib.
Okay. Okay. You see it. We pretty much get these levels. So this is pretty much near a high right here that we already made. This level is pretty much near our 28,100 level. We're only 4 points off. This 100 level is pretty much near that 28,250 or 28,200 level. So it's still lining up. If we were to add on, let's say we added on -2, let's go -1. That pretty much puts us right at this 28,500 level. So you can see the targets still line up, even if we don't use the fibs or if we just use the quarter point. So that will give us, and the reason why I'm measuring this to this is because this swing high is a complete move. This swing high, we could have used this one, but that only had a shallow retracement. I like to use swing highs, swing lows that have uh once we made this swing low, this swing high, that was a full move. And then it followed it by another full move where we had a swing low. And we had a swing low here. So for me, that's the best one to measure instead of measuring this move to this move because we never got a swing low. We could use,
You can use the whole from the bottom all the way to the last um
you could
high.
use this one, this low to this high, but this one's good as well. This one's good as well. This one to this one because we made a swing low, swing high, swing low. Here we made a
Okay.
swing low, swing high, swing low. We
Yeah,
did it.
when it took previous high, then it's better to take new one,
Yeah,
right?
yep. Yeah, you want to use the one that took out a high. And in this case, we did take a high out with this one. So we made a swing low, swing high, shallow swing low. So we could use this, but I think this one's more complete right here.
Got it. Okay.
And if you really want clarity, this is really the better one from here to here. And we measure from here. We still end up with pretty much the same levels. You see, we got our 100, our one right here. That's still sitting around the 28,050 level to 28,100 level, which is right here. Then our three puts us at or around here. If we throw a fib, this is our 188 right here. that still gets us right around there. And then our 28, our 200 level puts us right at the 28 400 level to 28 500 level. So it still lines up. So you have a couple options that you could use to pretty much get these targets as well. So that is NAS.
I have sent
And
you a
then
chart.
okay,
Can you check that?
sure. And copy link. Yeah, that's pretty much the same. Yep, pretty much the same. Yep. I you my mini me. You are a mini me.
Thank
So you spot on with that. Yep. New week opening gap. Swing high. We made an all-time high. Previous day high. Weekly opening. There's the fair value gap on the 1 hour. That's still lining up with our daily fair value gap. There's a 1 hour fair value gap here. We either take this high, low out, or we trade into this fair value gap and bounce. Pretty much the same thing. Then if we get above this, we trade back into that. We push up higher. Yep, pretty much the same thing.
you.
Pretty much the same thing. That was ES or NQ. Let me look. I didn't
Thank you.
look.
Thank you.
NQ. Okay. Yeah, that was NQ. Sorry. Okay. Did I drop this?
No.
Yeah, I dropped NAS.
Did you? Okay.
Yeah, it's in there. Okay. All right. Last chart. Let's look at ES. This is gonna be my first week trading, back trading this week. So we're gonna see how we do this week. We're gonna start kind of slow this week, but this gonna be my first week back. So let's go new week opening gap here. So we got our new week opening gap on ES, and we had pretty much the same situation where we took out the high that we made January 28th over here. The week before, we made a new high here. We gapped open on the following week. We traded sideways inside of that gap, and then we finally broke it out of that structure on Friday, made a new slight. Uh, we just kind of gradually made new highs on the following week. And then we ended up trading back in the range over here, stayed in that range for a while, and then we just broke it on Thursday. We set a new all time high here and here. Those two were eventually broken. And then we held around the highs on Friday. I did a little demo trading on Friday. Um, and then we set a new all time high here, right around 7,300. And now we're opening up on this week. We've gapped to the downside, we gapped up, and then we traded back inside of this new week opening gap. There's a daily fair value gap that we're sitting in between. You can see there's also a 1 hour fair value gap here. And then this order block stands out for me, this one as well. But the last one. This one stands out for me where this is the move that took us above these highs. So I'm going to kind of monitor what that one does. We got a swing low here that is inside of this fair value gap. And from the daily, right around the quarter point, But if we start seeing price continue to sell off, we get price to trade down into this hourly fair value gap and maybe into this bullish order block. And that's where we get our first potential area to bounce for on the 1-2 move up. If we get the 1-2 and we fail at or around this low that we just made on Friday, this swing low, and then our 2-3 takes us deeper into the daily fair value gap and into this 1 hour order block. But I think again, like we said before, I think that this may hold around this area unless we get some crazy news. And then we bounce at the 3. I actually think the 1 is the higher probability, but I'm gonna leave this here at the 3. And we get our 3-4 bounce inside of this order block slash near the low of the daily fair value gap near 71.91 area. Then, if we get back into this and we are going to fail, our 4 fails after we've inverted this daily fair value gap to take us below the low we made at 3, below this low, and then below this previous week low. Again, I don't necessarily see us trading a lot lower than the 3 or the 5 because that means that we would have traded back into this consolidation range and we were sideways in here for quite some times. So that'll probably be take some heavy news to get us through that range. So I think we hold at the 3 or the 1. Worst case scenario, we take out the 5 and we bounce from the 5. If we push up, which we've already began to do, we look at failing at we look at filling out this high failing and we set a new all-time high where the 0-1 could push up near that high and we either take it out or we fail just below it. Right now we're in that scenario where we pushed up and we fell just below it, but this could hold this new week opening gap. In worst case scenario, we get a 1-2 retracement inside of the gap, and then we hold that and push higher. If we haven't already taken out the new week, the all time high, the retracement we get on the 1-2 holds inside of the gap, and then it uses that 1-2 retracement to take out this whatever high we get on the 1, and then we take out the high we get on the 2-3 move to take out the all time high. That puts us at around the 73.25 area. And that 73.25 area would give us the high on 3. And then we could get a failure at the 3 or a 3-4 retracement that trades us back into the new week opening gap and likely near the daily or weekly opening price here at 72.75 area. And then if we don't continue to sell off there, we get a bounce at 4. The 4 holds at or near the all-time high or near the high of the new week opening gap. And then we push higher on the 4 or 5 move where we could see price end up around the 73.50 area. We can take the same approach with the fibs. We can use swing low, swing high, swing low. We throw the fibs on this level. That puts us again, same targets, right? 73.10, that's right around the 3. 73.30 area. That's also this pretty much covers our target right around 73.25 area. Then our 5 is pretty much about 10 to 20 points off from the 200 level. There's a 188 level that's probably, if we throw that on, that'll give us the 5 that we already have. Let's throw 188 on real quick just so you can see. Oops. What did I do? 188. Yeah. So that 188 level pretty much is spot on with the five, right at 7350 level. So that pretty much gives us our targets for the week. If we measure this swing low, swing high, swing low, and it's still in line with our quarter point levels, and we can kind of see. So I'm thinking highest probability is we get our sell off once we get our five on this case, but again, we could get it at the three or the one, but three or the five is the highest probability. So let's drop S&P. And that is all of the charts. I'm gonna leave the last portion open for Q&A, man. Not this one. This is kind of weird to do this session early in the morning. So let's see how it goes. I was telling Chris that I might switch it up on y'all, man. And still kind of debating. I know we said we were gonna probably do our um our next um our next 12-week year. And before I started it, I just wanted to do this session first to see how good the Wi-Fi was. But honestly, the Wi-Fi over here is better at home. So I don't know why I thought that this would be worse, but I just wanted to make sure that we did a session first before we kind of like nail down any sessions moving forward. So just for I guess first question from me for you guys is how do you feel about this session going forward? Like do you think or hear any differences in the quality or anything like that?
I didn't hear any like slowness or slow in your movements or in the computer. Nothing. It
Okay.
was fine to me.
Okay,
I can
cool.
feel your voice just
I'm gonna say
sleepy.
your voice. Yeah,
Yeah.
You
Other
definitely
than
sound
everything is
tired.
good. Yeah.
uh, okay. I can take that. I can deal with that. I ain't worried about that part.
No, I understand that is early morning and you are talking just so it's definitely it will be like that.
Yeah, yeah, yeah. I know. I drank coffee and everything. So
But Lisa, you will be like every today's your Monday morning, right?
today's Monday morning. Yep.
Yeah. So you
Yep.
can't sleep late Monday morning.
Yeah.
Doesn't matter you if you are going in party in night.
I can't party on Sundays. That's all that mean. I can't party on Sunday. But
Like
here's
So,
a what's
oh,
up, three?
I was about to ask you. So, like when you trade though, because I know I think you said you hadn't traded over there yet, but when you trade, would you
Hmm.
have to trade at like 12 o'clock at like no 6 o'clock
The easiest
p.m.
way to
our time or something?
remember, yeah, the easiest way to remember is whatever it is in the AM for you guys or PM for you guys. I am the opposite, the exact opposite minus 1 hour. So right now it is 8:46 p.m. at home. It is 7:46 a.m. here.
Oh, gotcha. Okay,
Yeah, yeah. So it's
so
like for
just
it's
me, it's similar to India. Like in India, that is morning also Monday morning. So
mm-hmm.
like
are you okay, all right?
I am good. I understand that.
Yep. You
Yeah.
just think 12 hours back, or really just think 1 hour. Just think 1 hour behind and then add a AM or a PM. And that'll give you exactly what time it is over here. So,
Got it.
and so for me, my normal sessions to trade back home are um, my normal sessions to trade back home are from 7 a.m. till noon, right? And from 7 a.m. to noon, I'm looking at I'm looking at 6 a.m. 6 p.m. until 11. So that'll be my trade hours. Now that I'm over here, 6 p.m. to 11 p.m. over here. And what I was thinking though, I was thinking again, I don't want to commit to it yet because I want to just kind of see how it goes. But I was thinking that maybe changing the midweek review to a live trading session on Wednesdays. So I don't know yet. We're gonna see. So that way we can trade together on Wednesday. But I'm gonna kind of see how that works because I want to have more than just us on that call. So I want to have a bigger group on that call. So we'll see. Like it's 90 some people in the group. So I would like to see a lot more people if I'm gonna do a live session on there. So um, I'm gonna kind of see how I can get more activity in the group first, and then I'll make the determination whether or not I do that. But if not, Wednesday, it'll be Thursday morning for me. I'll do this same call again. So, okay.
Okay.
Tell Ari I saw her doing her crossovers and her floaters.
Corey said he saw you doing your crossovers and your floaters. She talking about she don't feel good now.
Oh
I
no.
don't know what it is.
Well,
She
okay, y'all.
she played as a quarterback today in flag football. They lost, but she actually did pretty
What?
good first time.
What? Let me take the recording off. So I'm gonna go ahead and end the recording now.